We saw some weakness in Bitcoin and everyone turned bearish again, but is it really time to be bearish? I don't think so. And in this video, I want to show you the charts that are keeping me bullish, where my clear invalidation levels are, and what we need to keep in mind going into a potential red August. Let's start with the charts that tell me why we can still expect Bitcoin to move higher from here. While price did drop over the last couple of days, has anything actually changed on the chart? Just because people are more and more bearish on Twitter doesn't necessarily mean it is right. Right now, I don't think the chart has changed enough to invalidate my short-term bullish thesis. For example, let's start with the inverse head and shoulders from the last video. This is still one of the strongest bullish patterns in technical analysis, and it hasn't been invalidated yet. Yes, we saw a pullback, but that's completely normal after a breakout attempt. Markets never move in a straight line. As long as Bitcoin continue to hold this structure, I still think the measured move towards the 71,000 area is very much on the table. And look at this breakout candle. It shows how many traders were paying attention here, and this buying pressure successfully defended the level. However, later in the video, we also have to look at the invalidation of this pattern. But now let's zoom out and have a look at this rising channel, which I actually like even more. We have been following this rising channel for weeks now, and despite all the fear over the last few days, Bitcoin is still respecting it almost perfectly. Every higher low has been defended, and the pullback has stayed inside the channel. Until that changes, I don't see a reason to suddenly become bearish. In fact, if this channel continues to hold, the next logical move is a pushback towards the upper boundary. And as I said in my previous video, what's interesting is that this zone lines up perfectly with multiple confluences. For example, if you're an ICT trader, we have a fair value gap sitting around 67,000. Markets have tendency to revisit these imbalances before making a larger decision. And this one is still waiting above us. Then we still have a large pool of liquidity sitting around the same 67K region. Remember, these areas act as a magnet. This is the liquidity that large players need to sell into and push the price lower. And that's exactly why I think there is still a good chance Bitcoin wants to trade into that area before the next move, which I believe is likely lower. Why lower? I will also explain later in the video. So we have this inverse head and shoulders pointing higher. We have the rising channel pointing higher. We have a fair value gap around 67K. We have the liquidity around the same area. When we have these independent factors all point towards the same region, shouldn't we pay attention? And it looks like macro also supports the thesis. As you know, the DXY plays a big role in risk assets. When it goes up, risk assets usually go down, but the DXY is still around the $100 level, and so far it hasn't shown much strength yet. As long as the dollar remains relatively stable, that removes a major headwind for Bitcoin. And of course, we should also track gold and silver. They can give us hints about potential bounce areas for Bitcoin. Gold and silver both are sitting at areas where I think they have a very good chance to bounce. And in fact, I opened a brand new swing long position on silver here at 55. That doesn't mean I think it can go lower. It absolutely can, but I believe this is the accumulation zone between the 45 and 55. And at some point, it will likely bounce. Now, of course, none of this guarantees a Bitcoin bounce here. Nothing is really guaranteed in this market. But when I put all of these pieces together, the chart structure, the liquidity, the fair value gap, the rising channel, I still think the higher probability move is one more push higher before this rally is finished. But of course, we should not fall in love with our bias. The market doesn't care about our opinions. So let's have a look at the invalidation levels for all these charts and see when I will be wrong with my thesis. Let's start with the inverse head and shoulders. As I mentioned earlier, I still believe this pattern is valid, but only as long as the right shoulder holds. If Bitcoin loses roughly 61.5 and starts trading below the right shoulder, then this entire pattern becomes invalid. The second thing I am watching is the rising channel. We have respected this channel for weeks now, and that's one of the main reasons I have stayed bullish. But if Bitcoin starts breaking below the lower boundary of this channel, which is around 62K, then the first warning signs are there and we need to be cautious. And if we lose both the head and shoulders pattern and the rising channel, then we are not talking about a normal pullback anymore. This would be a change of character in the market. And I would stop being bullish and become much more defensive and shift my focus to the lower DCA levels. I don't want to force a bullish thesis after the chart has been invalidated. I would much rather admit that I am wrong early and adapt to the new market fast instead. But what could trigger this market sell-off and invalidate the thesis? Let's have a look at the macro situation we are in right now so we can better understand the risk factors. The first one is what I mentioned in my last video, is seasonality. As I said in my last video, in 2014, 18 and 2020, August was a very weak month for Bitcoin. Now history doesn't always repeat itself, but markets often rhyme. I am still expecting August to be a red month, and we are getting closer to August very quickly, which shortens the timeline we have for this bullishness. The second risk is of course geopolitics. Right now the market is ignoring most of the noise, just as I expected, but I am a bit concerned that once the World Cup is over tomorrow, things could heat up very quickly. I know I am probably the only one connecting these events, and it's poor speculation at this point, but I still think the World Cup was one of the reasons things remained relatively calm over the last few months. I guess we will find out on Monday whether the conflict escalates quickly or hopefully stays quiet. The problem is that we are so close to our invalidation levels that one piece of bad news could push us there and turn the whole technical picture bearish. But if things don't escalate, we still have one last thing to consider. The FOMC meeting on July 28-29. If the Fed turns hawkish or even hints at another rate hike, or if they signal that inflation remains a bigger concern than investors expect, that could also trigger a sell-off. But by then, however, I expect Bitcoin to be trading much higher already if nothing else happens first. And that's why I'm cautiously bullish in the short term. Is it enough for me to buy spot here? No. Is it enough for me to go long here? Also no. Instead, I want to stick to my plan and short Bitcoin higher. The technical picture is still bullish. I still believe the path of least resistance is higher. But as we move closer to the end of July and into August, I will watch these macro risks more closely. So to summarize the trading plan, right now I'm sticking with my bullish thesis. I still think Bitcoin has a good chance to push higher before this rally is over. And as long as this chart continues to respect the levels we discussed earlier, I don't see a reason to fight the trend. It doesn't mean I'm buying here or going long. I'm waiting for high probability setups and letting the market come to me. Patience has always paid me so far, so that's what I'm doing. If Bitcoin continues to 67,000 and 71,000, that's where I will be interested in hedging my spot Bitcoin that I bought down here with a short position, simply because that's where multiple technical levels are lining up, and that's where I think the risk to reward ratio is good enough for a swing short. Also, I want to remind you about the lack of volume during this rally. To me, this suggests this is more likely a larger bull trap, but I said many times in the last videos, if we move lower, I actually welcome it. Bigger corrections create bigger opportunities for us. If we're able to buy Bitcoin at these lower prices, we will generate much more profit in the next coming years. If you enjoyed this video, don't forget to like and subscribe to the channel. I post updates like this on a regular basis, and if something major changes, you will hear it first. As always, trade safe. Thanks for watching, and I see you in the next one.